Those who not able to join now can use it for later. Okay, so what we're gonna do is make sure that the setup looks same. So I have loaded my system on a 5 minutes on gold, and I'm going to show the settings first so that we can verify we all have the same settings. So the only three indicators that matters. One is the smart trend. Make sure that the time frame is set to the first higher time frame, and the smart trend value should be 6. By default, if you apply the template, you will get the same settings that I'm using here. So we do not need to change. In case if you find any difference, then you can change it as mine. On the smart money index, we need to set the time frame should be switched to 5 minutes. That's all. And again, it is by default if you apply the template. The one I just shared on the group, if you finding any difference, so use that one. Now about the version 3. So there are some changes in the new version. First of all, that you can see we have an option of to switch on and off of the historical order blocks. So just to keep the chart decluttered and keep it clean. So if you switch it on, then it will show you the history zones. That means the levels that are broken now, that will be visible too, which I do not prefer, and those is we can see here. So these levels which are broken. So in the previous version, these were visible. So I find that is a little bit of complicated. So that's why I have removed it. So I'll prefer to keep it off. So we will only have the active zones on the chart. So now you can see we only have the active zones that is not been broken. So this way we'll have a better visibility. From if you need, you can change the number of history zones from here. So the higher numbers you will choose, the more order blocks areas will be visible. I usually use in between 5 to 10. So right now I'm going to keep it to 10. So you can keep it between 5 to 10. We do not need to see too far. So rest of the settings should remain same. This one will have the POI phone notification. So you do not need to.
Hi,
Yeah.
I'm sorry to interrupt you, sir. Where did you go to take off the historical order block?
Here from history zones. If you go to order block settings, you can see there's a in the box settings you will find history zones. So you can just change the number, and the history zones will be there. And if you turn on the show broken order blocks, then it will show you the broken order blocks, which in case if you want to watch it for the flipped zones, then you can use it. Otherwise, you don't have to turn it on. Just keep the active zones visible on the chart. So you will find it out in the the alerts. Let it remain as it is.
Adipta, I think you're looking at V3. I'm looking at V2.3.
You are not having. I think you have not. You don't have the V3.
No, you only sent me.
Oh, I think you don't have. Not an issue. Just I'll send you straight away after this one. Okay, I'll send you with the default settings. So just apply that, and it will be same as this one. So I'm recording this video as well, so you can again have it. Whenever you need it, you can come back to this room, and you'll have the video here. Okay.
Thank you.
So these are the only settings that you can play around. Nothing else need to be changed. Everything is there. The best possible settings that should be used. Another thing that has been changed is about the phone notification. Previously, we did not have a phone notification for the higher time frame POI. Right now we do have. So that means whenever the price enters into the H1 or any high time frame POI, you will get a phone notification. So you really do not have to, wait all the time to see when the price enters, because these are the areas where we take most of our trades. So I think that will be very helpful for you. Another thing, Now nothing much we need to change from the settings. Use it with the template that is being provided. Now, the reason why we use it on the 5 minutes, because the 5 minutes and 1 minute is the entry time frames. Okay. We do not need to go into any higher time frames all the time, because we are getting all the higher time frame confirmation right here on the 5 minutes. The only thing before you start, there are some basic routines that you have to follow whenever you start trading. And as a trader, that you should be aware of. One thing, you should have the daily news outlook. You should be aware that when we have any high impact news coming, so you should be very aware of that. You can use Forex Factory or any other site that you prefer, because that's one of the very important thing as a trader you should know. Another thing, you need to choose a session of trading. We usually have 3 sessions, so we divide that into three sessions. One, that's Asian, which starts in the morning, which usually have the low volume market. Then we have the London session, and then in the evening we have a London and New York parallel. So you need to pick a session that is suitable for your lifestyle, as where you can give some time. The best session to trade is London or New York or London parallel. The reason behind that is you usually look for 1 or 2 good setups. Then you should target a certain time of the day when you want to trade. So I prefer to look for at least one trade on each session. So I avoid trading on Asian session. I'm only trading in a London. I'm only trading when the New York and London is parallel. So you need to choose that which session you're going to trade and then stick to it. You don't need to, if you get a setup, trade on that session. If you don't get a setup, then it's fine. You really don't need to, forcefully trade. Always look for a setup. Now, what we're gonna do, we're going to have the entry rules very simplified. We don't need to make things complicated. I'm certainly not going to explain the whole smart money concepts here, because that's really, because if you still need the smart money concept, knowledge of the smart money concept, then the indicator alone will not going to help you. You do have to have some smart money concept understanding, so that the indicator will make sense to you. Otherwise it won't. So do that, watch. There are plenty of videos out there. Do that, but don't overcomplicate it yourself, because sometimes when you know too much, it becomes more difficult to trade, because then you try to look too many things, you apply too many things to your trade. So we're going to keep the entry exit rule very simple here. The most we're going to divide the setups into 2 qualities, or maybe we can do it in a 3 qualities. One, we're gonna call a setups which is A plus. Second, we're gonna call a setup which we're going to rate A, and maybe third, setups which you can say the least possible, or maybe not as good as the first 2. So we maybe call it a B or B plus. That is one that we can always avoid taking that trade. We always try to aim to take trades. Either it has to be A plus or A. Now, how do we know that which setup is A plus or which is not as good as A plus? It depends on the confirmations. That what are the confirmation you are applying to the setup, and the more the the better the confirmations you have for the setup, the better the quality of that setup. For example, one thing that matters, as I already have told you, that I have my own point of view about the whole smart money concept, and I do believe that it is really nothing new and it has been there. So one thing that is even here applicable is having the idea of higher time frame market structure. So when we say the higher time frame market structure, so we call about, what is the higher time frame trend is going on, or what is the major trend is going on. So as long you follow the major trend, it will benefit you. Now there are two ways to understand the major trend. If you are not manually capable of understanding that what is the major trend is going on, you simply have to look for the smart order flow. Here you can see the smart order flow here is showing you that we have a buying bias on 5 minutes. So whenever we have a bullish bias on the 5 minute, whenever the order flow is showing you that we have a buying trend is going on, so the order flow does not show you the trend of ongoing time frame. It usually filter out all the time frames up to 4 hours, and then shows you what is the average time frame on all the time frames. So from 1 minute to 4 hour, the majority of the trend that will show you. So if the order flow is showing here that we have a buy trend, so that indicates we have a strong bullish momentum going on, and we should be looking for, for the buying setups while the order flow is showing you buy. Again, that is the one confirmation, that try to follow the trend as much possible. Second thing which you need to follow is try to have a higher time frame backing. Your every trade should have a higher time frame backing. So that I'm going to explain that how we going to decide the higher time frame backing. So how we can do this, that first you can go to the 15-minute time frame and spot the H4 POI. Look where we have the H4 POI. Look for the H4 POI. Just idea of the zones is enough. Have a look that if the price is inside the H4 seller zone, or if it's inside the H4 buyer zone, or is it away from the H4 seller zone or a buyer zone. So having the idea where we have the H4 key levels or key areas, it's very important. You really don't need to go on a more higher time frames. You just need to have a look on a H4, then switch back to the 5 minutes. Now, once you are in a 5 minutes, the main setups that we look for is when the price is bouncing from through this, the higher time frame POI. These zones are, very strong levels. Usually, in the most of the cases, the price reacts to these levels. So anything happening between these, we can take those trades, but we need to make sure we follow the trend. But usually, if you want to look for a very high quality setups, we need to look for the setups around the London session, from where the market start to grab the momentum, and we need to see where do we have the both sides of seller and buyer's point of interest, because that is the very obvious area between the price going to test. If you find out the price is ranging, then look for the nearest H1 seller or buyer POI, and you will see that eventually by the time we'll reach to the New York session, the price will try to retest these areas. And if you can catch a setups as close possible to these areas, you can have a very high quality setup, because you have the backing of a higher time frame. You have the backing of, for example, if I go to H1, you can see that after gold was dropping from here, even before that, let's go to the 4 hours time frame. So you can see this is the 4 hour order block, and you can see the gold started to drop from 4 hour, and it dropped until the 4 hour bullish POI here. You can see this fall from here constantly, and then it came up to the 1810 level. And if you go back to the H1 zone, you will find that from the H1 18110, it kept moving. So having the idea of your higher time frames order blocks, that if let's say that you switch to 1 hour or you switch to 4 hour, and you find out like here. Now you can see that the gold is breaking above this H4 order block. So now what we can expect here is that we can see some correction, and then gold will continue moving up to the 1881 level, or this whole seller order block. So by this you will have the idea that how far the price would want to go. But if you, when the market will open, you will see that this level has become a new buying POI. So now we can, if the price comes down, we can expect the price to reach up to the 1830 level, or the price can take a retrace from this 1860 and it will move up to the 1880 level. So you're starting your day with the clear idea about where the price is at the moment, because what happens when we become so focused on the earlier time frames. Why I'm telling you about the retracement, you can see that that money index is also now reaching overvalue level. So we can see some kind of correction either from this level or from this level. So we're going to see some correction on the gold very soon. It could happen on Monday. We can see some correction coming down and going up, or we can see on Monday the price may try to reach up to 1880 level and then it will drop and use the 1860 level as a support. Because if this level is get broken, that's a very basic concept which is applicable everywhere, that when a strong resistance is broken, it becomes a support. And same way, when a strong support is broken, it becomes a strong resistance. So you can see that on Friday, this H4 candle have given a closing above the H4 order block. So now we can expect a movement up to the 1880 level. But the thing is here, we know that the gold is right now on a overvalued zone on a higher time frame. So we can expect a drop. So we need to be careful about the sectors. And why we need to be careful? You can see that gold reached to the 1866 level and then it dropped. It dropped almost like 120 pips. So that is why when we focus on a 5 minutes, so it becomes more important that you give importance to the H1 seller point of interest or buyer point of interest, because then you're automatically giving importance to the higher time frame. You really do not have to switch to the H1 and H4 to see what's going on. Just by being on 5 minutes, if you're giving importance to the POI areas, you are automatically giving following the higher time frame levels. So that is one thing very important. Now let's talk about the entry and exit rule. Let's say that we are on an uptrend. We are on a very rising rally going on, but still I want to show you how we're going to use the money index that I see most of the members are not using it. It is one of the very important confirmation, and how it can help you to decide whether you should enter or not. So usually you can see that when the gold started to be overvalued, it moved. Now just because it is overvalued, that doesn't mean we're going to take a sell. No. We are not going to do. We are of course going to give the importance to what's happening on a higher time frame, what is showed by the order flow, that we are on a uprising trend and we should be looking for a buy. And if you can see here, we had one buy here on the NFP which just touch and go. Now there is a two-way of retest happens. Whenever a break of structure happens, you will notice there's a two ways of entry that can happen. One, you can see that we had this break of structure, and you can see that the next candle retested this level. The next candle came and mitigated this level. So this is the one kind of entry. The other kind of entry is where you can see here, we had this break of structure, the price retested this level, and then it came back to this zone again. Now, most of us will think that, this is now you have to decide that how you're going to. For me, if you're finding a movement, if you think that it is a strong moving uptrend, if you're following the trend, you can always take the retest entry. You can always take the retest as soon as the break of structure happens. If the price comes back to your zone, you can use the zone for entry. That is the one type of entry you can use it. The second entry, when the price coming back. Now the second entry, that is where you need a confirmation. For the first entry, you do not need a confirmation. You can simply, as soon as the break of structure happen, if the price come back, retest, you take your entry, set the stop loss just below the zone, or you can have a fixed stop loss, but make sure your risk to reward is always 1:3. If you really want to be successful in trading, if you really want to be, that having a very low accuracy but still in profit, then the only way you can do it is have a good risk to reward. Because if you do not have a risk to reward 1:3, 1:4, then the accuracy part comes into play. But if you have something like 1:3 risk to reward, and I have showed in the risk management that if you have a 1:3 risk to reward, how you can just winning one trade out of 5, you can still make money. And that is basically how the fund managers makes money. You will never find a fund manager who have a huge accuracy. They don't have it. What they have is a good risk to reward ratio. So that is one thing you always have to aim, that do not get bothered by loss. Because one thing that I have noticed is that most of the traders, they get very nervous after getting stop loss hitting one or twice. See, whenever you are using low risk, high reward risk management, your stop loss is going to hit because you are not having those 50, 100 pips of stop losses like the EMA crossover strategy. No, we are trading smart money concept. So we need to make sure the main, the strongest point of the smart money concept is where you apply low risk and aim for a high reward. That is what you have to focus on. So make sure that whatever the target you are having, whether it is, whatever the target you're having for a day, make sure that it is 1:3 risk to reward. So here you can take the first entry. We do not need a confirmation. But there are certain things that you can always look for before taking the entry, even with the trend. Always try to look for the entry, the first break of structure and the second break of structure. These are two the most high probability zones. So this is one thing you always remember, that whichever way, if you're finding the price is moving up, so give some time. Do not just because there is a zone, do not jump into it. Make sure, look that where is the first break of structure of that rally. So you need to have that idea. So you can see that the first break of structure, second break of structure, this one is third, this one is fourth, this one is fifth. Before we got the opposite direction break of structure. So look for the first and second break of structure from where the impulsive or from where the rally started. It can be from the downtrend or it can be uptrend. Spot that where is the first break of structure or the second break of structure that is not being used. There is a very big chance that the price will, when the price will come down, it will come down to that area to fill up those gaps and then take a sharp move again. So like here, now whenever you, so let me go back to the entry rules. So as I said, first entry right after the break of structure, if the price comes back to the zone, we do not need a confirmation. Second entry, like if price cause a break of structure, then it takes time and comes back. That is when we need a confirmation. Why we need a confirmation? It's because now see the price have made a move. Now it's coming back. So obviously now let's say that this is the zone. Now this here we had the first entry. Right after the break of structure, the price came back to this zone and this was the first entry. Now if the price is coming back, let's say that this entry was not here, the price did not come back here, like here the price did not gave us a chance to enter. It kept going up. Now the price will come back to this zone. So we cannot enter straight away, because now from here to here, the momentum of the market is changed. There could be a volume here. There could be buyers looking to enter here, but we do not know. Now, how you can be different than those traders who are trading already? Now, there are traders who are going to wait here because they know price have been moving up from here and it will come back to this here, this level. So this is a very strong level. So we're going to buy. So majority of the traders, majority of the retail traders, they're going to take their entry here. But that is what even the market makers knows. So it will make sure that it will go to the average distance and try to tap as many stop loss possible. If you do the same thing as everyone else doing, that you are not a smart trader. You will be a smart trader because you want to see these stop losses getting tapped. You want to see these stop losses getting, because this stop losses here, this liquidity here, that is the fuel for the market to go up. So we want to see the stop losses to get tapped out and then give us a confirmation to enter. Now, what is the confirmation? That I will show you in some time, that how we use the 1 minute for a confirmation. But before that, we're going to use a confirmation of 5 minutes. That how do we use a 5-minute confirmation? See, now you know that the price is moving constantly on uptrend. So we need a good confirmation here. We cannot take a counter trend trade, because if you're taking any trade against the trend momentum, so that is the counter trend. You expecting the price to move. So if you enter anywhere just because you believe that level going to work, so that is a bit of a gambling, because let's say for this zone, this 1866, just because it's a seller zone. Now from here you can see that this has moved over 100 pips, but there could be a chance that it could have gone continuously up there. So you cannot be the early sellers. You need to make sure that we have a confirmation. So here the first confirmation, you can see the price came. It gave a break of structure here. Now you can see the best confirmation, which I believe is the confirmation that we get inside the seller or buyer zone. So now you can see that we have a 5-minute bearish break of structure inside a seller POI. So it is a good sign that there is a possibility that the buying rally is exhausted. Now it wants to move down. So this is a good confirmation for us to enter. We can take this entry, and as long as the price is inside the seller POI, we're going to avoid any kind of buy trades. This is the basic things that you need to keep in mind. At the end, we're going to summarize and keep the 1, 2, 3 rules that should be followed for the entry and exit. But for that, we should need to understand the whole concept. We cannot take any buy trades when price is inside the seller POI. Second thing, sometimes it may look, oh, I should have entered. But you need to have a discipline. You need to have a certain conditions for your trade. And if the conditions are not meeting, it is really okay to miss out a setup. You cannot catch all the setups, and you really do not need to feel regret about it. So here you know that we are in a H1, just like here. The gold bounced from the H1 bullish POI. So as long the price was around the bullish POI, we were avoiding to take sell trades, because this is where the price is near the buyer POI. This is the discount area, and we should be looking for a buy, because the price have been coming dropping for quite a long time, and it cannot go like this. The price need a correction. The price need to make a retracement, and these higher time frame POI are the levels from where the correction and retracement happens, and that is where we look for the confirmation to enter. So keep it simple way. When the price is inside a seller POI, we're going to avoid looking for a buy setups. At least from 20 pips to the whole zone. For example, if this is the POI starting from 1866, so these two order blocks for the buy we're going to avoid because this is too close. Even though it has moved 50 pips, but this is too close to the seller area, so we're going to avoid. We are looking, but this setup, it was far, it was like 100 pips away. But then this becomes a very, great opportunity because you know that there is a seller or a buyer POI around the zone. So you know that the price eventually will reach out to these levels. So if you're getting a signal which is 50 100 pips, around 100 pips, or 80 to 100 pips far from the zone, you can expect the price to bounce and use those order blocks and reach up to this level. So that can be used as your target. But once you are close or inside the higher time frame POI, forget about the taking opposite direction trade. Look for the trade with the confirmation. Look for the trade that is favored, favored by the seller POI. But we need a confirmation. Now, what about the 5-minute confirmation? First, we'll talk about the 5-minute confirmation, and then we'll go down to 1 minute, and we'll talk about how the 1 minute can be a entry confirmation. So 5-minute confirmation for me is only when the price is entering to these buyer or seller zones. Whenever the price is entering to the H1 seller or a H1 buyer POI, you need a 5-minute confirmation. Now, why do we need a 5-minute confirmation? Because we really do not know how far the price will go. Even inside the zone, how far the price will go. So why do we need? So let's say that if we are inside a bearish H1 POI, so why do we need a bearish breakup structure? This somehow gave us a confirmation that now the sellers are entering, and we have a confirmation that the price is now want to reverse. The price have been continuing going up, but now it is failing, and now it is giving us a bearish confirmation that price may want to give a reversal from this level. Now you need to understand a trend confirmation. If you are looking for a trend confirmation, you need 2 breakup structures in the same direction. One breakup structure is not enough to confirm a trend reversal. A trend reversal you can confirm if you get back to back. Let's say that now we have been going up. Now if we get back to back 2 bearish breakup structures, then we can assume that we are having a trend reversal and the price is trying to come down. One confirmation is the only confirmation that we can look for a sell setup inside this. And your target should always be the opposite directions order block. So for example, if we get this bearish setup here, so if we are entering here, the target would be 1:3 to the nearest zone. So as soon as your target reach to the first order block, you're going to break even your trade and make it risk free, because there could be possibility that the price will come to any of these order blocks and then it will bounce back and continue the movement up to the next zones. So that is why alone, you first of all do not enter blindly inside just because the price is inside the seller or buyer POI. Wait for a confirmation. So in here we have the confirmation of bearish breakup structure. So yes, this can be taken as a sell. You can take the setup here and set a stop loss. I usually trade with 20 pips stop loss and 60 pips or take a profit. So, and you can decide the risk management as per your comfort, but make sure that your risk and reward is at least 1:3. Now, similarly, now when this is happening, now we're going to look for what is the 1 minute confirmation. The 1 minute confirmation is something you will like the most because it gives you the early entry confirmation. Let me show you. First, let's go to 5 minutes and let me show you that how we use the money index to use the confirmation. Now here you can see that the money index was overvalued here 1, 2, and 3 times. We can see the money here. We have the confirmation. Now you can see the 5 minute confirmation. It came here. Now you know that you want to take this trade, you know that you want to have the trade here, get an early entry. So how we can use the money index for that? One thing that you always make sure that when you're taking entry, there, if you're taking a counter trend trade, if you're taking a trade against the trend, make sure that you have a backing of a higher time frame. If there is no POI, you cannot enter. There has to be a higher time frame POI. Otherwise, you cannot enter. That will be too risky. If you are trading with the trend, then we're going to use the 1 minute and 15-minute POI. Using, if you're trading with the trend, we are on the 5 minutes, we know that we're having a bullish market structure. So first I'm going to show you how we use the 1 minute confirmation to trade with the trend. And then I'll show you how we use the 1 minute confirmation to take the counter trend trades at higher time frame POI. So for that, you need to look for the pullback to complete. You need to wait for, because even on here on a 1 minute, the money index is showing you the 5 minutes value levels. It is not showing you the 1 minute levels. It is showing you the 5 minutes value level. Now here you can see the price started to keep rallying from here. Now, if you just blindly use the money index just because it's blindly, so we can enter here, but you can see the price moved over 200 pips. And you can see we do not have any bearish break of structure. The price was keep on breaking the highs. You can see all the swing highs were broken and we do not have any bearish confirmation here. Even though the money index is showing that we are overvalued. But now you can see money index exiting from the overvalue zone. And we can see a confirmation. We got the first bearish break of structure. We got the second bearish break of structure. Now we know that it is existing. So you need to wait for the price to make an exit. You need to wait for the price to make an exit from here and use the 1 minute confirmation for your entries. So here you can see that we got the first break of structure and we use, now when you trade with the 1 minute, you can have a very small risk because 1 minute zones are very small. So you can always have a chance to grab, 1:5, 1:6 trades. So you can take your chance. Because you really don't need to use big stop loss on a 1 minute, but your take profit remain the same. So that is the advantage. But for that, you must wait. When you're taking a counter trend trade, you must wait for a money index to be overvalued and then showing you the exit. So you can see the money index was red while it was overvalued, and while it is red, we do not see any kind of bearish structure. We don't see any kind of bearish break of structure. So that is the simple meaning that if you don't have a bearish break of structure, you cannot enter. Simply wait. There is no need to, from here to here, you see that we do not have any bearish break, so we cannot take any sell trade. But now the price is getting exits. Now you can see the price is now coming down. We got the first break of structure, we got the second break of structure, third break of structure, and you can use these break of structure to take your entry. Of course, the first or two, not more than that, because then it will be late entry. If you get the first or second break of structure entry, that's absolutely fine. You can simply use the level as your entry, set the stop loss above the zone, and the target should be always higher. For example, here you can see that we had a break of structure and the next candle moved back to the level. Now we again have a break of structure and the next candle moved back to the level. So we use the zones of 1 minute as a confirmation after the money index is exiting from overvalue or undervalue zones. Similarly, you can see here the money value came down to the undervalue zone. Now we simply waiting here because of course we are on a higher time frame. Why we are waiting here? Let me see if it is showing the 5 minute zone or not. So you can see here this order block here, let me maybe I have to turn on the broken zone for a better understanding. So here you can see that we have this zone broken here. If you go back to 1 minute, you will have a better idea of those zones. I don't know if it's okay, it's showing here. See, when the price coming, as I told you that we have a two type of entry. One where the break of structure happen on a 5 minute and the price come back instantly and we take a trade. That is the first entry type where we do not need a confirmation. But if the price is coming back to the zone later, then we need a confirmation because we do not know if the zone going to be hold it or if the momentum keep on gonna continue. So here you can see when the price returning to the M5 order block area, we do not have any bullish break of structure on a 1 minute. That means we do not have any confirmation. We simply wait. We do not need to enter just because it is a order block. You need to understand you cannot just because it's an order block, you cannot enter. Order block alone is not enough. The indicator is showing you all the market structure, break of structure, and whenever there's a break of structure, there is going to be an order block. Now, just because it's an order block, that doesn't mean it's going to work, and you can just simply enter when the price retesting the order block. You know, that's you cannot take. The one thing you need to always apply is look for a confirmation. Whenever the price is retesting after some time, and you were waiting on that order block, whether it can be with the trend or the counter trend, if the price is coming back to the zone after some time, then you need a confirmation. So you can see that when the price came back to this 5 minute zone, we do not have any confirmation. Now we got our price index on a undervalue level, and then you can see this rise here, and we got a first bullish break of structure. Just let me see. So we can see the first level here. We got the first break of structure, first 1 minute order block here. Now you can see the price came almost to this level and moved back. Now let's go for the second order block, which was here. And then we had the third order block, which was here. We using the 5 minute POI and we using a 1 minute as a confirmation inside a 5 minute order block as entry. So what happens when you wait for a confirmation? It helps you to avoid those liquidity hunt that price will try to do. The price will come to this order block, this support area, and it just went to hit those stop loss. Because when the market is moving, they do know the average stop loss area for any entry level. So whoever looking for a buy here, they're going to set the stop loss around, slightly below this area. And that's why the price came to this level, grab all the liquidity. Now it's moving up again and it gave us a bullish break of structure. So when you use the confirmation entry, it helps you to avoid getting those stop loss hunt. It helps you that you're waiting. So you're waiting for the stop loss hunt to be over, then the price to make move, give you the 1 minute confirmation, and then we are taking the trade. You can take the trade at any 1 minute confirmation. If you turn it off, so you can see that we got the first order block here, second was here, and the third was here. So here, just by this, if you use this as a counter trend on exit, the price moved almost 99 pips or 100 pips. Now, if we use the 1 minute confirmation here, so this was the very clear entry where the price make a break of structure and retested the 1 minute zone, and we have entered with this candle. Stop loss just below the zone, and then this price went up to 60 pips. Or you can just exit on the opposite direction of break of structure. So you can use the 1 minute confirmation to enter. You can use the 1 minute confirmation to exit from the trade.
Hi, Aditya, to clarify, where would you set the stop loss on that entry?
See, now when you're trading, if you use a 1 minute confirmation, You can have the same concept of stop loss, because if you're going with the fixed, it depends that if you're using a dynamic stop loss or if you're using a fixed stop loss. If you want to follow the fixed 1:3 risk to reward stop loss idea, then you go with as normal. Just enter the trade on the order block, and your stop loss will be, if I'm trading here, I'm going to use maybe 10 or 15 pips stop loss, and my take profit will be 3 times.
Okay.
Make sure that you have at least 5 pips gap from the zone whenever you're setting the stop loss. So 5 pips below the zone. So we need to keep, the spread in our mind. So do not make the stop loss too steep that just because of the spread you will get stopped out and then the price will move. So don't fall for those 1 pip or 2 pip stop loss. Okay, that really doesn't matter. What matters that how confident are you about the setup. So as long as you're following a good risk to reward manage, your stop loss really doesn't matter. Your accuracy really doesn't matter. So all you matters that you have a certain quality of setups that, okay, these are the confirmation I'm going to look, and these are the only type of setups that I'm going to trade. And all I need is 1 trade out of 5 or 2 trades out of 10 to be in profit. That is all you're gonna need. Now, being having the patience to apply the risk management, that nobody can teach you. That you have to learn by yourself. That you will follow that the 1:1 out of 5 trades or 2 out of 10 trades, and you will follow those risk management accordingly. That is all up to you. That cannot be trained by anything. It will only happen when you'll apply this, when you'll see it working, and it will give you the confidence. So here you can see, if you are looking for a buying setup, so of course we got the first order block here, right? Now if we let's the average spread on the gold is around 20 points, which means 2 pips. So you can always target 2 pips higher of your order block and 5 pips below the order block. So that should be the range of your entry and stop loss. So if you apply that logic here, so this could be the entry. If not, then of course this second order block was not triggered, but the third order block that we got, the third bullish breakup structure that we got, this was triggered straight away, and then the price moved. Why? But one thing that you need to remember, that of course we are using the 1 minute confirmation, but the confirmation shouldn't be too far away from your higher time frame POI. We need to make sure that if we are using the 5 minute order block area and we are using a 1 minute confirmation inside that 5 minute order block, then your 1 minute confirmation should be as close to those 5 minutes. It shouldn't be like, we cannot see here we have the 5 minute zone. So up to these 3 order blocks, it's valid for this order block zone. But we cannot, go and say that, okay, we're going to use this order block. Because then it will become a confirmation for some other zone. So that is one thing you need to maintain, that if you're looking for a confirmation, make sure that the confirmation is near to the higher time frame POI that you're looking for. Now, if you just follow the same setup, I personally prefer to take trades with the confirmation, because if I'm looking to apply a better risk to reward, then I prefer to trade with order block. Now why I'm saying that, you can see that the price moved back to this level. Now for a 5 minutes, I think I need to increase the zone a little more. No, it is broken, so it is not going to show. So you can see that this was the order block, but if we move into 1 minute, the 1 minute will give you a better entry. So you can see that 5 minute order block was actually this 1 minute breakup structure. So you can see that when the price came back to that 1 minute zone, see, so this was the range, this one green candle, and you can see the price came back to that first breakup structure, and then it gone from there, it dropped another 35-40 pips. So that is why 1 minute, having the 1 minute is a refined zone. You need to be able to choose the refined area, because we want to have the best possible entry where we can reduce the stop loss and have a best entry that can give us a better risk to reward. Because remember, that's so as long you maintaining a good risk to reward, your accuracy, it really doesn't matter, because all the time you will understand that the main failure, and the most of the traders you will be come across, they'll be looking for accuracy. They want an indicator or a system or a strategy that have a good accuracy. It never about the accuracy. Accuracy cannot, it is never possible for something to be, consistently 70, 80, 90% accuracy. That is not possible. And even though if anybody have the system or strategy, it's a very common sense. Nobody going to share it. So what matters, and that is the difficult part, and that is the part which majority of trader fails, and that is the risk to reward. That is the risk management. That is the main reason why a trader is not able to make money, because you are not able to apply your risk management to your strategy. Now, whatever strategy you use doesn't mean that you have to use smart money concept. You trade simply Bollinger Band or RSI, trade anything. But eventually it will depend that what is your risk to reward. If your risk to reward is good, if your risk to reward is above 1:3, 1:4, then your accuracy will rarely doesn't count. You just need 1 or 2 trades out of 10 trades to be, in a money. So here, what we are going to do, we'll try to make sure that you all have a strike rate of 1 out of 5. That is the minimum strike rate that you should be able to pick your setups. That should be 1 out of 5. That means out of 5 of those setups, 1 going to hit or 2 going to hit. Obviously, the better strike rate you will have, the more profit, the more easily you're going to make a profit. And how we going to choose? If we simplify the conditions here, that what is the best conditions, what is the best setups to trade, I would say trade only in London or New York. Avoid trading exact on the news time. If you want to trade news time, you wait for the news impact to happen. Allow the market to move. Then you use your spot, use that news impact in your favor. Do not jump into the news time. Wait for the news to make the impact on the market, and then use your entry point. So that's how you can also trade news. You really don't need to trade on the right instantly with the news candle. That is not the way to trade news, because you really don't know how far the spike or a slippage will go. So we really don't need to risk that. But yes, we can let the news to impact the market. We can choose our entry zones after that. Like the video that I shared, NFP, it started from here. I was waiting to take my NFP trade on this order block. It didn't trigger. Then I was waiting here. It didn't trigger. I missed out. But then I got chance to enter here. So I was using the momentum established by the impact. It is absolutely fine that I couldn't catch it here, couldn't catch it here. But now when the price came here, now this is the first confirmation we got. The price dropped from the H1 seller POI. So it showed that, okay, we have there are sellers here. But we need, if you are looking for a sell, we need a confirmation. Always wait for a 5-minute breakout structure inside a buyer or seller POI. Use that breakup structure for entry. Use that order block inside a seller POI, and you will automatically have the strike rate of 2 or 3 out of 5. You can test it out by yourself, that you can wait. Sometimes you will see that the price will cut through these zones. And that is the reason why we need to have a breakup structure inside the zones, inside the higher time frame zone. Trade right away when you get the confirmation. If you get this, like here, now we got this breakup structure. Straight away this green candle came. So this is our entry. This is the instant entry. We do not need a confirmation for the instant entry. You can simply set a 20 pips stop loss, or even 15 pips is enough. You can see that. So you can save up your stop loss, whenever you're setting it, you can see that, okay, I do not need to. Now, if I set 20 pips, it is here, but the zone is only here, this much. The zone is only how much? It is around 5 pip. So for the 5 pip zone, I'm giving an additional 10 pips or a 15 pips. So I can cut another 5 pip, I can cut another 10 pips. So you need to, but I'm not cutting my take profit. My take profit remains 60 pips. Just because you're reducing your stop loss, you don't need to reduce your take profit. Your take profit is always going to be as per your risk management, which is 60 pips. But if you're getting a chance to reduce your stop loss, then yeah, of course. Like if I could reduce my stop loss to 10 pips, now setting my take profit 60 pips, what that will do, that will allow me to have 2 trades on a risk of 1. That means with that 20 pips I'm using for a 2 trades. So I can, if my stop loss get hit, I'm going to wait for another break of structure, another confirmation here, and then I will take entry. If it breaks, if the candle comes, break this zone, goes above, hit your stop loss, that's fine. Just simply wait for another break of structure to happen, another order block to form, then take the trade in that zone, as long as you are inside the seller POI. Okay, so what we'll do here, let's have some Q&A, and if you have questions, just you can ask one by one, so we can talk about that. Anyone, guys? Do you have any questions? Yeah, it's difficult to know. Okay. AB. What's I don't it's difficult to know about your name. You probably don't have the same update. If you're having the V3 update. So which order block didn't got it? On a 5 minutes, the first bearish. See, that is one thing I do want to clear. You need to understand the candles highs and lows are different on a different broker. The market structure, the indicator usually look for the highs and lows and then wait for the break of structure. Sometimes, maybe I'm using it on the Octa FX here. So here it may be detecting this as a high and low. But there is a possibility that on some broker, it is not like this. The value may be different and it is not a break for the candle. It is, so the indicator may not recognize it as a break. So you will not see the zone, and that could happen. That sometimes does happens due to the different broker data. Even that happens with me as well. I mean, if I'm having here, so sometimes on my prop fund account, I don't see the same break on this. So that is why I am allowing that you can have at least 2 different brokers. You can load your system on 2 different brokers, one on the one that you're trading, or maybe the one you're practicing. Sometimes it helps to spot because sometimes you will see if something is doji. So whenever it's now here, you can see that this is being showed as a order block because it is showing a very small doji type of bearish candle, but maybe on another broker it is simply doji and it is not bearish candle. So the order block will not, the smart order block will not detect it as an order block. So there can be difference between the broker data, and unfortunately nothing can we do about it. Yes, I'm recording it and I'll try to share it, the whole recording to the group, so it may help. I think there are more members who couldn't connect, so I will install it and do it. I'm not going to talk about the risk management on this webinar, maybe because we can do it on the next webinar. Before that, I will be making of those risk management videos that how you can make it your own risk management, or maybe we can talk about it on the next session, that how you can plan the risk management as per your account size, as per your target, and how does it help. See, again and again and again, I'm telling you, the indicator will show you everything what is required. But if you're not, we cannot trade the order blocks blindly. Of course, in the pro version, I'm going to add other confirmation that will tell you, the probability of that order block, that how strong it is. I'm going to include the market volume indicator that will confirm that if the order block have any kind of strong. But that is the pro version, and all the members going to get the pro version as a free update. But until then, we do need to stick to this, and no matter what version we're going to use, no matter what indicator we're going to use, if you do not have a risk management, if you do not have a trading plan, you're never going to succeed. That is the truth. You will never be successful if you do not have a proper risk management, because you do not know how much you should lose on each trade, how much you should make on each trade, and what should be your daily drawdown, your personal daily drawdown. Especially to the prop fund traders, you need to have your own daily drawdowns. So I'm going to post it out. Just let me know if you guys have any more questions. If not, then we're going to wrap up this session, and then I will share the recording to the group, and then later on we can discuss on the next webinar about the other topics. Of course, I'll be putting more live trading videos, so that will too help you from Monday onwards, so that to help you to understand how to take the live trades. But the risk management, of course, I'm again and again telling you, you must follow the risk management. Otherwise, nothing going to help. Okay, so shall we wrap up this session if you guys do not have any more questions, and then we will catch up again on our next webinar. Okay, guys, then thanks for joining. Yes, I'm not able to understand. Who is talking?
Oh, I just said thank you.
Oh, okay. Thanks. So we'll connect on the next webinar. Keep noted if you have come across any problems, any doubts, so that we can discuss that on a each webinar and rectify the issues. Okay. So thank you all for joining. Have a nice and profitable week ahead. Bye bye.